My question here is this from a position of strength or is it defensive? Is Intel trying to compete with Apple and Samsung who are outpricing it, or is this sort of a constructive bolt-on acquisition?
I would say right now they're still in a position of strength. Intel is still in a position of strength. They really have a dominant position in the semiconductor chip space. But this is looking down the road. The PC business has been slumping since, say, 2011, sliding year after year. Yeah. Now, they dominate that. Intel does. This allows them to buy a company that's more into the mobile centers, which are the centers that are providing information to our tablets or our smartphones. So they're trying to get out where the industry is going in 5 or 10 years. They're still in a position of strength, but they worry about what the next decade is going to look like if you're at Intel.
Clearly makes a lot of sense. What about the price? It's interesting. It's $45 a share. $54 a share, which is what they offered in April,
right,
and they got turned down.
Exactly. When the deal fell apart, we reported that it was $54 a share. That was the price that Intel had offered. And then after the story came out, the Altera shareholders called us and, more importantly, called Altera and said, wait a second, 54 is a perfectly good price. You're not going to get there anytime soon. It's going to be months, probably years, until you ever get to that. So that pressure, the shareholder pressure on Altera, got them back to the table in the last couple weeks after the deal fell apart back in April.
All right, Jeff, hang on one second. I want to bring in Cory Johnson, our Bloomberg West editor-at-large, who is joining me now from San Francisco. Cory, what's your take on the deal? Is this a game changer for Intel?
I think it's very important for Intel. I think Intel is going to, in two ways. The markets that they will be addressing are markets where Intel has not always been strong or will give them more to sell. So in the data center, Intel's had a presence in the data center. They're going to have a lot more to sell into the data center now. In telecom equipment in particular, they've been pretty weak. And, of course, in mobile, and to the degree that Altera is there, that's beneficial to them as well. But I think it's also interesting in a technological stack. This is much, if you will, stupider logic. These are dumber chips, and Intel is accustomed to making further down the chain here. And so this puts them in a lot of different businesses that they haven't been in before. They've had this sort of the high-margin, high-end chips that have gone into PCs and data centers, not so much the chips that are really designed for individual tasks or designable for individual tasks, such as automotive, military, and so on.
Why do you think Intel shares are trading down today?
Well, they're spending boatloads of money, I guess. I mean, that's typical when a company does an acquisition. I think it's worth noting that this deal, however, is meant to be accretive. And almost all of the mergers that we're seeing now, virtually all the mergers, are accretive to earnings. They will add to earnings. And so, from a financial perspective, they're buying revenues and they're buying earnings growth because it's harder to come by in the economy right now. We see that across the board, that companies either try to make their earnings per share go up by buying back shares, or they try to make their business get bigger by buying businesses because organic growth is just hard to get to.
You're buying the top line growth. All right, Cory Johnson, thank you so much.